you're watching Tax Saving Tips for High Income Earners. I'm your host, H. Cortez, Financial Health Mentor to the Working Class. Alright guys, welcome to another episode of Financial Health Mentor TV. I'm your host, H. Cortez, Financial Health Mentor to the Working Class, where we do our very best to bring practical, proven wealth building strategies to working class Americans all across this great nation of ours. Today we're going to talk about one of the 4 obstacles that's keeping hardworking people from building real wealth in America, and that is taxes. The other 3 would be inflation, debt, and also low financial IQ. So we're going to talk about taxes today and how, as a high income earner, you can reduce your tax liability and put that money back in your pocket. If you haven't watched any of my videos before, then understand something, that I teach that the number 1 wealth building tool in all the world is the United States tax code. But guess what? If you don't have a business of some sort, you cannot access the number 1 wealth building tool in America or in all the world. So in order for you to really start taking advantage of this tool and building long-term, multi-generational wealth, you have to put yourself in business of some sort. And we recommend that you start some sort of home-based business. The number 1 reason that we recommend a home-based business over any other kind of business, because a home-based business will allow you to take regular, everyday expenses that you already have and turn them into legitimate tax deductions. All right, so let's get into it real quick. If you were to take and put yourself in a home-based business of some sort, you will have the opportunity to take advantage of over 400 tax deductions that are available to home-based business owners. So we're just going to go over 4 real quick and show you the power of having a home-based business and using the number 1 wealth building tool in all the world, the U.S. tax code. All right, so if you have a home-based business, then you're going to put your office in your home. All right, as a high income earner, maybe you have a monthly mortgage payment of $2,000 per month. All right, so at $2,000 per month, you put a home office, and maybe your home office takes up about 20% of your living space of your home. That's how you calculate the home office deduction. So 20% of your $2,000 a month mortgage is going to be $400. That's $400 that you save in taxes each and every month. You multiply that by 12, that's $4,800 per month. All right? Now, what about your utilities? Your office is in your home, so your monthly utilities, yes, become a tax deduction to the tune of 20%. So say you have $1,000 worth of monthly expenses. That's your power bill, your gas bill, other general maintenance that you pay on a monthly basis, maybe your lawn service or your sprinkler service, water, all of that stuff rolled up. Let's say you got $1,000 in utility expenses or home maintenance expenses. 20% of that is $200. Multiply that by 12, that's $2,400 of tax savings each and every year for your utilities. All right, what about mileage? All right, you're driving your personal vehicle each and every day anyway, but what about you start taking care of some business during some of that mileage, those miles that you're putting on your car? So you drive your personal vehicle for business 700 miles a month. All right, now think about it. You're already going to the golf course. You're already going to social functions. All right, how about you start talking business and promoting your home-based business on those functions, and not only the cost of those functions will become a tax-deductible expense, but also the miles that you drive to those events. So 700 miles per month for business at 57.5 cents per mile is roughly $400 per month that you have in tax savings just because the miles you're driving for business. Again, you multiply that by 12, that's $4,800 per year. And then last, we're going to talk about the ability to pay wages to your children in your home-based business. All right, now I have a few home-based businesses. I have a 17-year-old son, a 15-year-old son, and also a 13-year-old son. They all work in my home-based business. All right, so I can pay them wages for the functions that they do. Most of the time, they're handling my social media. They're going to cut and edit this video and get it uploaded on YouTube and that sort of thing. So I pay them for that. So say for instance you have two children, all right, one around 15, 16, so you can pay that one a little bit more than the one that's maybe around 10 or 11. All right, so you're paying one $500 a month. You can pay up to $6,200 per child, and it's tax-free for them because no one pays taxes on earnings below $6,200 per year. But it's also a tax saving for you as an employer. So you pay one of them $500 a month, you pay the other one $300 a month. So that's a total of $800 a month that you're paying in wages. You can deduct the full $800, so that's $800 per month times 12, that's $9,600 per year that you're saving in taxes. So I know you're probably thinking, well, what do the kids do with the money? Well, the kids take and buy whatever you normally buy for your children. All right, that could be school clothes, that could be club fees for sports or whatever, that could be private school tuition. All right, that could be whatever you would normally, whatever expenses you normally have for your children, you pay them a wage and then let them pay their own bills. All right, that's called income shifting. So you have the ability to save $9,600 per year. When you add that all up, that's over $21,600. All right, so I don't know what you make as a high income earner, but when it comes tax time, you're able to reduce the amount that you make by $2,100. Now, I mean $21,000. Now, this is just 4 of the over 400 tax deductions. We didn't even talk about meals and entertainment. All right, we didn't talk about the fact that you, when you vacation, if you take care of business on those vacations, a large percentage of that vacation now becomes a tax deduction. All right, we didn't talk about the fact that when you go golfing, and then you know every time you go golfing, sometimes you have to pick up the rounds for the buddies that tag along. Well, guess what? If you're talking about business before, after, or during that golf experience, then that entire cost of the golfing trip is a tax deduction. So there's over 400 tax deductions that you're able to take advantage of if you understand the power of having a home-based business. Now, if you're in the 21st century and you're talking about building wealth and you do not have a home-based business, I want you to consider partnering with a financial health mentor in a business of your own in the financial education space. Because guess what our business is? Our business is teaching these strategies to everyday hardworking people. How many other high-income earners do you know that want to minimize their tax liability? All right, you can get paid for teaching them these strategies. So go to www.financialhealthmentor.com or click on the link below, and I'll give you a strong, solid overview of exactly how the program works and how you can earn money in the financial education space. So you're checking out Tax Saving Tips for High Income Earners. I'm your host, H. Cortez, Financial Health Mentor to the Working Class. And until I talk to you in the next video, get your money up.